Um, Hello, everybody. It's me again, Jimmy Wong, CPA. And today we have a viewer, okay? And her name is Amy. She's gonna ask me some questions regarding LLC. So please welcome one of our viewers, Amy.
Yes, hi, Jimmy. Hi, everybody.
Hey,
yeah, I have
welcome.
a couple. Hi, thank you. Yeah,
Okay,
I have
so
a
let's
couple
go.
questions regarding the LLC after I saw your video.
Okay, let's go. Let's go.
Okay, yeah. If there is no employee on payroll, are we still subject to the self-employment tax, 15.3%?
Okay, so before I give you the answer, okay, let me lay some groundwork for you. During our Q&A session today, we will assume that the LLC is taxed as a partnership. So as we know, partnership is kind of a pass-through taxation, okay? So it's very important to set the ground rule for that. LLC is taxed as a partnership. Now, just so you know, an LLC can elect to be taxed as a C Corp or S Corp, but that will be for another video, okay? So to answer your question, first we need to know what kind of business is your LLC. Now, if your LLC is a rental business, either residential or commercial, then the income will most likely be rental income. A big chunk of it will be rental income. So rental income, okay, has a special treatment. You will only have to pay income tax on the rental income. It doesn't have to pay self-employment tax 15.3%, okay? But there's a one caveat, okay? The company LLC as a landlord, okay? You do not provide any extra service such as maids or cooking or any other services that are not normally provided in a rental setting, okay? Very important. So what happens if you do? What happens if you do provide these extra services? Then your rental income will be subject to self-employment tax, 15.3%. Okay. Now, if your LLC is not a rental income, not a rental business, so just like any other businesses, then the LLC will generate self-employment income for the partners for you. So therefore, not only you have to pay income tax, but also self-employment tax, 15.3%. Okay, and all these taxes are based on the net profit sharing from the LLC through Schedule K1. And also on your question, you said if the LLC doesn't have payroll, okay, and if the LLC is not a rental business, then yes, of course, the LLC partners will pay both income tax and self-employment tax. Okay. Here's another tip for you, Amy. So for LLC partners like yourself, okay, you cannot receive any W-2 wages from the LLC. Okay, this is by law. Okay, I know that there are still a lot of people, a lot of LLC partners out there doing it the wrong way. They still give themselves W-2 wages. So please know that this is wrong. Okay, please don't do it. Okay. LLC partners cannot receive W-2 wages.
Okay, thank you. And then the next question I have is, what would be the benefit to have one than more member LLC instead of single member LLC?
Okay, so what would be the benefit of having more than one member, okay, instead of single member LLC? Now, go back to the foundation that we just said earlier, right? We assume that LLC is taxed as a partnership by default, okay? So because it's a partnership, by design, the partnership is supposed to have two or more partners who agree to share profit and losses from the company, right? That's what we call partnership in the traditional sense. So only after only much later that most states in the US would allow one person to set up an LLC. And that's when we call it a single member LLC. Okay. So in order to understand the benefit of having a multiple partners, I think we need to look at the limited liability protection. Okay. So as the name suggested, LLC is a limited liability company. So in general, all LLC partners have limited economic risk of loss, and your personal assets should be protected. Okay, that's the whole idea of setting up a company, registering your company with the state's government, Secretary of State, so that your company can get a limited liability protection. Okay, that's the whole idea. So in order to get the limited liability protection, then we need to assume that the LLC is operated in the way that it should be. For example, it must hold it out to the client as a legal entity. Hey, we're doing business. You know, I am a company. Okay, you are doing business with a company, so that is holding out to his client as a legal entity. And then all business contracts, transactions are conducted in the name of the LLC. And also, the company must maintain a separate business books and record. Okay, and then there cannot be any commingling of personal and business assets. Okay, so in general, that's the way that a company should be run. Okay, separate between personal and business, and have business books and records. Okay. Now, because nowadays most state laws allow a single person to register a single member LLC. That's very true. And the sole member, the single member, is afforded all the same limited liability protection, just like a multi-member LLC. Okay. But because the LLC is run by one person, so do you think it's more likely that that one person, the sole owner, would commingle personal and business asset? Maybe, maybe not, right? And because the company is run by one person, do you think the company would, diligently maintain a separate business books and record? Okay, so as you can see, there can be a lot of questions and a lot of points that can be attacked from the other side, saying that, hey, this company, yes, you are a single member LLC, but you are not running it the way that it's supposed to be because there's only one person running it. Okay, so there's possibility of being attacked on that way. Okay, so then that's what I think is the big difference between one member, single member LLC, and multi-member LLC.
I see. Okay. Yeah. Okay. And does it make sense to have one LLC for each rental property when the property value is high? And how about residential property versus commercial property?
Okay. So if you are not concerned about the cost of maintaining the LLC, then I would say yes. Okay. It makes a lot of sense to have one LLC own one property. Okay. And it doesn't matter residential or commercial. The one-to-one relationship like this is always good. And I think it's even better if you can separate the residential and commercial out altogether, right? Don't mix residential and commercial property into one LLC. Okay. And the reason is that, okay, we need to look at the risk and liability, and we want to find the best way to separate these risks and liability. So there's a legal term that say bankruptcy remote. Okay, basically in layman's terms is that if one LLC, one entity goes down, okay, then all the other LLC, all the other properties are not affected because you have one-to-one relationship, right? One go down, right? The others is not affected. Okay, so the moral of the story for this question is you're gonna have to do some assessment of the risk and liability that you currently have, right? How many properties, what kind of properties, what is your relationship with all the tenants? And then you should be able to know, hey, these properties have more risk or more liability than the others. Then you can make some arrangement how to separate them out. Okay.
Okay, thank you. And also, can a family trust be a partner of LLC?
Okay. For this question, may I assume that your family trust is a living trust?
Yes.
Okay. So a living trust is a trust that you set up while you are still alive, right?
Yes.
So some people call it a grantor trust. Okay. So because it's a living trust, so definitely yes, the trust can own partnership interest in an LLC. So it can be a single member LLC, or it can be a partner in a multi-member LLC. Everything is fine.
Okay, so what you are saying is the trust can be the name of the trust.
Yes, the trust, okay, can be a partner of the LLC. So,
okay.
yeah, so for example, you have a living trust and you can set up a single member LLC, meaning that your living trust is 100% owner of the LLC. That's fine. Right?
Okay.
Or you want to do business with me, but then you
Mm-hmm.
want to use your trust and Jimmy Wong to do business. So
Mm-hmm.
yes, you can set up an LLC and Jimmy Wong is 50% owner, and then your trust is 50% owner. That's fine.
I got you. Okay, thank you so much, Jimmy.
Okay, so if you don't have any other questions, thank you again, Amy, for your time and sending me these interesting questions. So for all the listeners out there, if you have any questions, feel free to let me know. Maybe we can, join in and, shoot a video clip like this. Okay?
Okay,
Thank you, Amy.
thank you, Jimmy. Bye-bye.
Bye-bye.